Hello and welcome to Moneylife News and Views. I am Debashis Basu. Since early June 2020, the stock market has been on a wild bull run, which has drawn in more and more retail investors than ever, and that is at least in the past 30 years. And they have the time, money, and opportunity to play the market. For the first time in decades, retail investors as a group dominate the cash market trading volume, which is now around 60,000 crores per day. Over the last 6 years, the share of individual investors rose by 12 percentage points from 33% to 45% in financial year 2021. This jump has especially come most in the last year, that is 2021. By contrast, the share of foreign institutional investors and domestic institutional investors is down to single digits. In financial year 2021, on an average, about 12 lakh new demat accounts were opened per month compared to just 4.2 lakh per month in 1920. That is 3 times every month. The growth rate has doubled this year over and above last year, when the monthly average account opening shot up to 24 lakh accounts in the first quarter. These accounts are overwhelmingly those of retail investors. However, it is precisely when a roaring bull market is underway that mistakes start to creep in. Indeed, millions of new investors in a wild bull market is a disaster waiting to happen, as we have seen time and again. What can make the outcome worse are 2 new trends that were never seen before. 1, technology that automates and fires automated trading through algorithms. And 2, the proliferation of social media that can create massive herd-like moves not seen before. In both the cases, ease of use and ease of sharing, which can bring about massive scale in consumer technology, can work against investors. Consider the story of Utsav Kapoor. Utsav is an IIT alumni software engineer. He's lost his job in April 2020 due to the pandemic. He had a savings of about 25 lakh, all in fixed deposits. This is when somebody contacted him from a Bangalore-based company. Utsav paid them around 1.2 lakh in course fees to learn about stock trading strategies. They later launched an advanced high-tech server-based platform for algorithmic trading. This software allowed server-based algo trading without any supervision. As an icing on the cake, they said, they provided several trading strategies, according to Utsav. This is disputed by that company. In using this algo, all backtested to give great returns, they claim Utsav gradually lost about 8 lakhs in 4 months. Dejected, he found a disruptive app. Now, this one is called TradeTron, recommended on internet forums, which suggested you can make 20% or more per month from the stock market. TradeTron is another server-based app for algo trading that did not require any manual supervision. In fact, TradeTron is a marketplace, which means they sell hundreds of algos from self-proclaimed gurus to sell you this, and you can choose the trading strategies of your choice. Each one promises spectacular returns in the best intellectual presentation to appeal to any scientific mind, as Utsav says. Their user interface is addictive, he found out, and beautiful like any online gaming portal. The site is integrated with numerous well-known brokers put through the transactions fired by your chosen algos. Now, what happened when he started using this? Between September 2020 and February 2021, in a roaring bull market, Utsav lost over 20 lakhs through TradeTron. Overall, from algo trading, his entire savings in FDs got wiped out, plus additional savings from his provident fund. He opened accounts and traded with half a dozen brokers, which is extraordinary, between April 20 and February 2021. And all of them, he says, recommended algo trading. He admits he was foolish in continuing to trade, but he also accepted all the losses as his own mistake for not being intelligent enough to make money from the stock market. This belief was triggered by educational propaganda of these algo platforms, says Utsav. However, after his losses, he was curious and he started researching deeply about the algorithms and found that these platforms are flouting the norms set by the exchange and the Securities Exchange Board of India. His broker, meanwhile, was calling him to try out another new path-breaking platform. I believe there will be many utsavs when the market becomes volatile and algos go haywire. Unlike previous occasions when price declines could trigger irrational behavior on the part of newbie investors acting independently, this time automated trading through algos can massively amplify such irrationality, which is all very common in the stock market, which will lead to still more volatility and still more irrationality in an ever spiraling loop. Indeed, we have an example of how irrational things can get from 19th October 1987, when program trading led to a 22.6% decline in a single day in Dow Jones Industrial Average of the US, and which led to a worldwide panic when various stock indices across the world declined between 20 and 45%. This was caused by by a trading program called portfolio insurance. It was supposed to insure the portfolio, but all it did was at every time the market went lower, the program tradings asked the investors to sell more and more and more. And the more they sold, the more the market went down and the more the program asked them to sell, which caused a waterfall decline because vicious cycle of new lows and more selling, etc. took over. Now we have all the ingredients of such a shock in place. Could be even bigger, because now we have 5 elements in this retail algo if that becomes big, and brokers are ensuring that it becomes very big. 1, the incentive based system, the aggressive push by algo players and the brokers to generate huge trading volume. So there is an incentive in place. 2, the ease of setting it up. They all say no coding is required. You set up an account and you start firing the algos. 3, the hook, which is the gaming characteristics of algo sites, which Utsav has pointed out. 4, extremely ease of use, no research, no analysis. It's all off-the-shelf strategies, buy and use. 5 is a scale, automation to fire many trades by many people at the same time. All of these 5 ingredients make for a tinderbox kind of a situation. And all it will require is one external event to turn the market extremely volatile. And when the market turns volatile, that will be like lighting a match to an highly inflammable tank of chemicals, which is all this algo trading software. Unfortunately, the Securities and Exchange Board of India does not see it this way and is not interested in regulating retail algos, which perhaps put the entire market at risk. Thanks for watching. And if you do like what you watched, please subscribe.